Welcome to the Daily Brief, where I'll go over the action in the market for Wednesday, February 15th, and then we'll see how things look for Thursday, February 16th. Just like on Tuesday, we had a slight down day. Well, on Wednesday, we had a slight up day. So after Tuesday, things were shifting a little bit more negative because of the down day. On Wednesday, we're shifted back a little more positive, but still nothing's really been decided. We have this overhead resistance above where we're at, and until the market is able to really get above that and close above that, we're kind of destined to go sideways at best, if not see a decline. So let's go back and talk about what happened. Right at the open, we had a lower open with prices moving sideways right after the open. As the day went on, buyers pushed prices back up to the daily pivot at 41.30 before hitting resistance at the unchanged level. That's that built-in support or resistance that we have each day. It acted as resistance on Wednesday. Prices then fell back from the unchanged level and then went back above the unchanged level, and we chopped above and below the unchanged level and ended up closing right at the high. So that is positive. We were up 0.28% on below average volume. Another concern, we're just chopping sideways. Volume is tapering off. Our technicals, we have this positive backdrop that's way in the background. Then we came up and hit resistance while we were overbought, and so that's pushing us back down. And now the market is just trying to maneuver itself to figure out, does it want to go up? Does it want to go down? Well, in the meantime, it's going sideways because of this inflation and interest rate scenario. And there was a huge economic report that came out that I'll go through in just a moment. So here is the intraday action where we gapped lower. We didn't get down to S1. We were below the daily pivot. We chopped sideways. Then finally some buying came in, took us back up above the daily pivot. We hit the unchanged level, bounced back down. Then we came back up above the daily pivot again. And this time we were able to get above the unchanged level, but we stalled out pretty quickly. We came back down below the unchanged level and then back up again, only to close at the high for the session. What are some comments that we can make? The retail sales report, that's the economic report that I'll go through in just a moment. It was much stronger than expected. On a short-term basis, we have our Sean trend meter and our stochastics, which are still extreme positive, and I'll show you those charts. On a longer-term basis, we have our moving average study, the 150 and the 200. They're still extreme positive. The dollar was up, and interest rates were also up, and I have some charts to show you concerning interest rates. We still have all of our yield curves that I follow that are inverted, the 10 to the 5, the 10 to the 2, the 30 to the 5. And then another one that a lot of economists follow is the 10 to the 3 month. The 10 to the 2 and the 10 to the 3 month are the ones that most people tend to focus on. Sentiment is still positive. We're at 74. We're just one tick below being extreme positive. We did advance slightly from 73 to 74 in Wednesday's session. I'll look at the retail sales report and other economic data on the next slide. The ADX is above the moving average and it's getting stronger. We're above 20. So we are technically in a trending environment, but based on price, we're just not going anywhere. I've kept our bias and momentum at mixed for right now just because there seems to be a lot of indecisiveness. So let's look at the economic reports. We had the weekly MBA mortgage applications index. It came in down 7.7%. Last week, it was down 7.4%, so a little bit more weakness is coming back into the real estate sector. Retail sales were up 3%. That is a lot more than what they expected. They had thought that it was going to come in up 1.7%. Last month, it was down 1.1%. When you take out automobiles, it was still up 2.3%. They only expected it to be up 0.8%. Last month, it was down 0.9%. The Empire State Manufacturing, again, that mostly focuses on New York, it came in with a reading at minus 5.8. They expected it to come in at minus 19, so that was better than expected. The last time we had this report, it was down 32.9. Industrial production came in unchanged, where they expected it to be up 0.5%. Last month, it was down 1%. Capacity utilization came in at 78.3. They expected it to come in a little bit higher at 79.1. Last time we had this report, it was at 78.4. And business inventories were up 0.3% as expected. And last month we had the same reading, it being up 0.3%. The NAHB Housing Market Index came in with a reading of 42, greater than the 37 that was expected. Last time we had the report, it came in at 35. So a little bit of conflicting information with the housing market index going up and the weekly mortgage applications now going down 2 weeks in a row. Here's the inflation nowcasting. The red and the blue line just show the CPI and the core CPI, where it's ticked down a little bit with the inflation, but was pretty much flat with the core inflation. Down on the bottom, we have the PCE inflation. That's the yellow line, and the green line is the core PCE. As far as our ulcer index, it still shows that we're very complacent overall. With the up day, we also saw the VIX decline that I'll show you in just a moment, but it's just suggesting there's not a lot of fear in the market right now. Here is the VIX, where it dropped even further. We're well below 20 now, both with the line chart and on the bar chart. Volatility of the VIX continues to decline. We're seeing a decline with the bar chart as well as the line chart. Our ADX is still above the moving average and climbing. The green line's still on top, even though it declined slightly, but the red line also declined. So this technically is an uptrending market according to this indicator. Our Arun, after giving us an extreme positive reading, continues to decline. It was pretty much flat from Tuesday to Wednesday. It's still positive overall, but is declining after being extreme positive. On our daily chart, we're just right back up into the jumbled mess that we've been in for quite a while. This is the R1 level, also a previous resistance level, where until we can get above this R1 level at about 41.82, we're going to have a really hard time getting any kind of sustained uptrend. So in the meantime, we've been chopping sideways. On a negative note, we may fall down from here. We have a pivot level at 39.88. Switching back to the positive side, we do have a recent golden cross, so that signals that we're generally in an uptrend as well, and we still are maintaining prices above the December highs. Our stochastic chart, a little bit of an advance with the short term as well as the intermediate short term. We're still extreme positive with the long short-term chart. Our oscillators are still giving us kind of a mixed bag right now. The slope is having a tendency to roll over and go down slightly. The TSI is pretty much flat right now, but looking like it wants to cross over negative. The MACD is pretty much flat, but looking more negative. The PMO has not crossed over negative yet, where the PPO has. It's pretty much flat. Our longer-term oscillators are showing some weakness, but they have not crossed over negative yet. On another note, as we get close to this blue line and purple line, this signals some kind of an extreme positive reading. That's another thing just to be aware of. Our PMO is still above the moving average, but if you look at price and volume, we dropped down below the moving average a few days back. Our PMO steady, a little bit of a tick up with those PMOs that are rising and not extreme positive or negative. The buy signals declined slightly, and we're flat to slightly lower with the PMOs that are above zero. Swell and trading oscillator. This is more on the positive side. We saw an advance, and both price and volume climbed back above zero. The Sean trend meter is still extreme positive. The BPI, not really registering too much because we're chopping around sideways, so there's really nothing new that it can calculate, but after giving us an extreme positive reading, it has been coming back down slightly. The NYSE bullish percent index, after breaking out and hitting this high, has now been coming back down, and we're pretty much flat to slightly down with this indicator. Chicken money flow did see some improvement. The green bar really spiked up, and we're back above the moving average, so this is positive. TTM squeeze, we still have the darker colored bars, which is a neutral positive, and this continues to decline, which is also neutral positive. Go, no-go system, after going up with the dark blue bars, switched back to more of a lighter color blue, now has switched back to darker blue. That is positive. Looking at our double and triple exponential moving averages, we're still above this longer-term anchored moving average. And right now it's at about 40.86. So if we start to fall, we'll be looking at that level. Short-term fib, we're still above the 100% retracement, so that is positive, but we're not breaking out. In our longer-term fib chart, going from the all-time high to the October low, shows that we're bumping up still against this 50% retracement at 41.53. And until we can really get above this and close above it, this is going to continue to be pretty significant resistance. Longer term, we're still in no man's land. We have upper resistance at 42.13. We have support at 40.20. We're still above all of the moving averages. This is helping this chart to look more positive. The Elder Impulse System, after switching back to neutral on Tuesday, has now switched to positive with the up day. McClellan Oscillator, which dropped below zero, has now climbed back above zero. The summation index based on price is flat to slightly down, where it's in a more pronounced decline based on volume. So that's mixed to possibly negative. New highs, new lows. We saw a little bit of a breakout in new highs, but overall we're just headed flat on our 5 period and pretty much flat with the 10 period. Advanced decline line still holding up above this moving average based on price and volume. Accumulation distribution. This is still looking rather positive. It's above an advancing moving average. But our volume is really tapering off. The black line's below the red line and the histogram is declining. Here's the longer term moving average study. We're extreme positive with the 150 and 200 simple moving averages. Here's the Russell 2000, which it had a pretty good day. After hitting this upper resistance and coming back down, it hit support at this green line. It has since been bouncing back up. Also positive is the RSI on top, where we came down to the 50 level and we're bouncing above 50. However, on the bottom, the MACD has crossed over negative. Now, if we continue to see advances in the small caps, this will probably turn back over, but it hasn't turned back over yet. The diamonds continue to be positive, even though they're drifting sideways. And the NASDAQ came right up to this R1 level, another resistance level. We'll be watching this to see if we can break through and then close above R1. And we're just a little bit above R1 with the NASDAQ 100. Can we continue to break out above that? The Qs are back to positive. After spending a number of days being neutral with blue bars, they're now back to a green bar. The Pring Bottom Fisher, we just saw a recent cross, so this would validate a buy signal. The home builders, with the S&P up slightly, the home builders were also up a little bit. The ratio is still holding up, and they're having a pretty strong tendency to go in the same direction. Another chart that looked like it was breaking out only to come back down now showed some renewed strength on Wednesday was the high beta stocks against the equal weight S&P 500. If we continue to go up, that suggests more of a risk-on or stock-friendly type of environment. Looking at interest rates, after coming all the way down to the 200-day moving average, the 10-year yield bounced up off of that, and it's continuing to climb. So interest rates, if they continue to go up, could still produce some headwinds for stocks. Looking at some of our possible positive scenarios, saw a little bit of an advance with the Qs to the S&P, as well as discretionary against the S&P, and large cap growth outperformed large cap value. Looking at the growth value ratios, the large caps outperformed. Mid caps had a nice little upturn. Small caps, although they're lagging, did see a little tiny bit of a breakout on Wednesday. 2-year yield, the reason I'm bringing this up is because we're starting to go up with the 2-year yield, which potentially could take out this spike. We're still positive with our 50-period exponential moving average of the new highs and new lows. We're above zero, and that is a longer-term measure that is so far holding up. And here is that same chart just showing the black line, which is the indicator, and the red line, which is the moving average, and they're both above zero. Our staples to S&P 500 ratio is still looking viable. After spiking up and coming down, we might be building a little base here, but so far this has been holding up. Our outlook for Thursday, the technicals are mixed, but now with the slight up day, we're just a little bit more positive. We have housing starts and building permits coming out. The PPI, that'll be the big one. Weekly jobless claims, the Philadelphia Fed survey, and then all the listed geopolitical events. Nothing has really changed as far as that's concerned. In the news cycle right now, there's talking about these balloons and UFOs or UAPs or whatever they're calling them now. That's kind of got everybody fixated for the time being. And then you have to wonder, okay, what are we being distracted from? But so far that hasn't fed over into the market, either uncertainty or that something else might be going on. Looking at the Stock Traders Almanac statistics for February 16th, not really much in the way of giving us any insight. The Dow is up 61.9% of the time. I'm keeping that as neutral to slightly positive. The S&P is actually more neutral to negative, being down more than half of the time. And the NASDAQ is down even more than that, so it's more neutral to negative. And then all the other things that I go through periodically. that are providing so far a fairly positive backdrop. We do have one speech coming out on Thursday. That'll be Governor Lisa Cook, and she will be speaking at 4 p.m. So that'll be right when the market closes. And then our scenarios, hard to go with the down one now. The technicals are mixed, but they're slightly positive. Hard to go with the up one, but that's the one that we default to for right now, because even though the technicals are mixed, we have this positive backdrop, and a lot of our longer term indicators are still holding up, and we are slightly positive after the up day. We do have that major resistance above where we're at that I pointed out on the fib chart, and sideways is not really viable because the ADX is above 20, it's above the moving average and getting stronger, and we default to positive. So our conclusion, the S&P is mixed but slightly positive, short term positive but mixed, intermediate term also mixed but still positive, long term we're still above that 200-day simple moving average, and we had a recent golden cross. Thank you. I hope you found this helpful, and I will talk to you in the next video.